Banks are quietly reporting your sole prop business cards to your personal credit. Chase Ink cards are showing up on TransUnion reports, and if you applied as a sole proprietor, you're the most exposed. I spent $139 and 90 days to build a separate business credit file that's invisible to my personal score. But someone with a 799 credit score got approved for $5,000 when she should have gotten $15,000 because she skipped one step after forming her LLC. 4 questions tell you whether to form an LLC or stay sole prop. I'll walk you through all of them. I'm Flo. I teach credit and business funding. Like, subscribe, notifications. Stick around. I've got a free LLC decision checklist linked below. Let me cut through the noise because there's a lot of confusion around this. A sole proprietorship is not a business entity. It's a tax designation. If you earn any money outside of a W-2 job, freelancing, Uber, selling online, consulting, you're already a sole proprietor. You didn't file anything. It happened automatically. An LLC is a legal entity. You file paperwork with your state, you get a certificate, you get an EIN from the IRS, and now your business exists separately from you on paper. The way I look at it, there are 5 differences that actually matter for your decision. Everything else is noise. Number 1, liability. Sole prop. Your personal assets are exposed. LLC. They're protected. If your business gets sued, your car and your savings aren't on the table. Number 2, taxes. Both pay the same self-employment tax, 15.3% on profits. Both file Schedule C, identical until you elect S-Corp treatment later. Number 3, cost. Sole prop costs nothing. LLC costs $89 to $539 to form, depending on your state and formation service. Number 4, credit building. Sole prop uses your SSN. Business activity blurs with personal credit. LLC gets its own EIN and builds a completely separate credit profile through Dun & Bradstreet, Experian Business, and Equifax Business. And here's something that's making this difference even bigger right now. Some banks have started reporting sole prop business cards to personal credit bureaus. Chase Ink cards have been showing up on personal TransUnion reports, and sole prop applicants are the most affected group. That means the separation you thought you had as a sole prop, it's eroding. With an LLC and EIN, you have a stronger structural barrier between business and personal reporting. Number 5, perception. Banks, vendors, and lenders take an LLC more seriously. When you apply for a business line of credit, showing up as an LLC with an EIN signals permanence. It signals you're not testing an idea over a weekend. And some banks won't work with sole props at all. Blue Vine requires an LLC or corporation. Sole props get rejected regardless of revenue or credit score. On the flip side, Amex accepts sole prop applications and tends to be generous. The bank you want to work with might make this decision for you. Here are some similarities and differences in a nutshell. Feel free to take a screenshot of this comparison table. Here's the framework. Answer these 4 questions and your decision is made. Question 1. Are you making consistent money, at least $1,000 a month? If yes, the LLC formation cost makes sense. $139 is 1 month of dues at a co-working space. If your business isn't generating revenue yet, SoProp is fine while you test. Question 2. Do you have any liability exposure? If a client could sue you, if someone could get hurt, if you're signing contract, you need the liability protection yesterday. An LLC puts a wall between your business and your personal assets. A sole proprietorship is just you standing there exposed. Question 3. Do you want to build business credit separately from personal credit? If that's your goal, and if you're watching this channel, it probably is. An LLC with an EIN is the infrastructure you need. You can build some business credit as a sole prop using your SSN, but the separation is incomplete. The real separation comes with an LLC. And here's where I have to be precise about something, because I see this misinformation everywhere. Your LLC gives you a separate business credit profile. That part is true. But when you actually apply for a business loan or line of credit, most lenders still pull your personal credit too. Wells Fargo wants a 680 or higher. Bank of America wants 700 or higher for business line. Building business credit gives you more options and more leverage. It doesn't eliminate the personal credit check. Question 4. Are you thinking long term? If this business is going to exist in 2 years, form the LLC now. Every month you operate as a sole proprietor, your business history is tied to your SSN. When you eventually form the LLC, you start that credit profile from scratch. You lose the timeline. From my understanding, most people watching this fall into the form the LLC category. The cost is low, the protection is real, and the credit building advantage compounds every month you wait. Let me walk you through the exact process. This takes about 3 weeks total, and most of the work happens in the first hour. Step 1. Verify your business name. Go to your state's Secretary of State website and search for your name. If it's available, you're good. If it's taken, pick another name. Also, check the USPTO trademark database. You don't want to build a brand on a name someone else owns. Step 2. Choose your state. If you operate locally, form in your home state. If you operate online and want flexibility, Wyoming is the move. $100 state filing fee. $60 annual report fee. No franchise tax. Compare that to California, where you're paying $800 a year in franchise taxes, even if your business makes $0. Step 3. File through a formation service. I use Northwest. $39 for formation plus your state's filing fee. That's $139 total in Wyoming. They handle the paperwork, include a registered agent for the first year, and you're done in 7 to 10 days. LegalZoom charges $199 to $299 for the same thing. Step 4. Apply for your EIN. This is free. Go to irs.gov, fill out the online application, and you get your EIN immediately. Takes 15 minutes. This is your business social security number. It's what separates your business credit from your personal credit. Step 5. And this is the step most people rush past. Open a business checking account and actually use it. Bring your EIN letter and LLC formation documents. Do not mix this with personal money. Every dollar in and out is business activity, non-negotiable. But here's what I've seen happen over and over. Someone forms their LLC, gets their EIN, and immediately starts applying for business credit cards. Brand new entity, zero banking history. They get approved for $5,000 when they could have gotten $15,000. The difference is 3 to 4 months of consistent deposits in that business checking account. Banks underwrite based on the relationship, not just the application. Fund the account, let a season, then apply. Patience here pays literally. Step 6. Start building credit. Open vendor accounts, apply for business credit cards, and begin building your separate credit file. That's the whole point of the setup. One thing to know about Entity H. Some funding products won't even look at you until your LLC is 2 years old. That clock starts ticking the day you file. Every month you delay formation is a month added to that wait. The longer you sit as a sole prop, planning to file eventually, the further away those products stay. Total cost year 1. $139 formation plus $125 for registered agent renewal, if not included. Under $265 to build the foundation for your entire business credit profile. Here's something that surprises people. As a single member LLC, your taxes are identical to a sole proprietor. You file the same Schedule C, you pay the same 15.3% self-employment tax on profit. You deduct the same expenses, software, advertising, travel, business meals at 50%, home office at $5 per square foot up to $1,500, vehicle mileage at 72.5 cents per mile in 2026. There's no tax penalty for forming an LLC. There's no tax advantage either. Not yet. The tax advantage comes later. Once you're consistently making $40,000 or more per year in profit, you can elect S-Corp tax treatment. You file Form 2553 with the IRS, set up payroll, and pay yourself a salary. Everything above your salary is taxed as distributions, not subject to that 15.3% self-employment tax. Here's the math. You're making $120,000 in profit. As a sole prop or standard LLC, you pay $18,360 in self-employment tax on all of it. As an S-Corp, you pay yourself $80,000 in salary. Payroll taxes come out to about $12,240. The remaining $40,000, no self-employment tax. You just saved over $6,000. Subtract $2,000 to $3,000 for payroll processing costs. You're still ahead $3,000 to $4,000 a year. But don't jump to S-Corp right away. You need 6 to 12 months of profitability data first. The administrative burden isn't worth it. Below $40,000 in annual profit. Let me save you from the mistakes I see every week. Mistake 1. Staying sole proprietor too long. You're making money, the business is real, but you keep saying, I'll form the LLC next month. Every month you wait is another month of credit history tied to your SSN instead of building on your EIN. Set a deadline and stick to it. Mistake 2. Choosing the wrong state for prestige. Delaware sounds impressive. It doesn't matter. Banks don't care if you're in Delaware or Wyoming. Pick the cheapest option that works for your situation. Wyoming at $100 plus a $60 annual report is hard to beat. Mistake 3. Not separating finances on day one. You form the LLC, but keep running business transactions through your personal checking account. Your accountant hates you. The IRS notices, and your credit profile is a mess because there's no clean business financial history to show lenders. Open that separate business account within a week of formation. Mistake 4. Forgetting annual compliance. Every state requires annual reports or renewals. Miss a deadline and your LLC can be dissolved. Set a calendar reminder. The fee is usually $25 to $150. The reinstatement fee for a dissolved LLC is $200 to $500 plus a headache. Mistake 5. Forming LLCs when you need one. You have 3 business ideas, so you form 3 LLCs. Now, you've got 3 registered agent fees, 3 annual reports, 3 tax returns. Form 1 LLC. Run your primary business. Form others when they're each generating real revenue. And a bonus mistake I'm seeing more of lately. Using a virtual address as your only business address. Banks are getting stricter about this. Some are flagging virtual offices during account opening. The workaround is to make sure your address is consistent across your EIN filing, your bank application, and your Secretary of State registration. Consistency matters more than whether it's a home address or a virtual one. But if a bank catches a CMRA filing on your address, they may reject the application. Real talk, this decision matters more than people treat it. Your entity structure is the foundation everything sits on. Your credit profile, your liability, your tax strategy. All of it flows from this choice. Don't rush it, but don't overthink it either. Here's the bottom line. If you're testing a small idea with no revenue and no liability risk, a sole proprietorship works for now. Costs you nothing, get started immediately. But if you're building something real, if you want liability protection, a separate credit profile, and the credibility that opens doors at banks, form an LLC. The cost is $139 in Wyoming. You can do it in an afternoon and have your EIN before the week is out. I put together a free LLC decision checklist and walks you through the 4-question framework. Gives you a state-by-state cost comparison for the 10 most popular states and includes every link you need to form and get your EIN today. It's in the description. Grab it while it's there. Quick reminder, this content is for educational purposes only. Always follow up with your own research before making any financial decisions. Keep that momentum going. I'll see you in the next one.